Today I'm going to show you the stochastic momentum indicator and how it can help you get into trades and when to exit trades. These are two of the things that I find people have the most problems with, and today I'm going to help you with both of them with one indicator. Having said that, never use this by itself. Use it with other things, and I'll demonstrate some of that with you right now. All right, so first of all, let's open up the indicator so you can see the parameters that I use here. So it's called SMI, or Stochastic Momentum Indicator. Now I use lengths that are different than are going to be the defaults in your indicator. So when you open it up, this is what I use: 15 for D and 6 for K. I like those. You can fool around and play with other inputs if you want to. Upper and lower horizontal lines, 40 and -40, that is traditional. And then it draws two lines, your SMI. I'm going to use green for that, and the average of the SMI, and we will use red for that. Okay, so that's it. Now, let's see how to trade it. So if you go up here, as I said, you don't want to trade this by itself, so here's one of the rules in top dog trading we have. It's called the rule of 3. We've approached this price level 3 times and failed to break through it. So the rule of 3 says that after the third attempt, if the market does not break through a price level, then it's unlikely to break through anytime soon. Therefore, we would be happy to take the trade in the opposite direction that we feel that is going to be final resistance, at least for the near future. But we need to have some sort of confirmation of that. And that's how I use SMI. I use it really as a confirming indicator. So since we've got this, now I've got something to confirm that, and that here is the green line goes below the red line. Again, the green line's the SMI, red line is its average. And this is going down. Momentum often leads price, by the way. That's one of the well-known characteristics of momentum. And so we get our confirmation of trend change here. And we could even take a first cycle high after the cross of the moving averages here. By the way, this is the 50-period simple moving average, and then the black one is the 15 exponential moving average for your reference. And, oh, by the way, you will need something that helps time your entries, obviously. So this is kind of a big, broad stroke indicator. It's not really for precision, accurate timing. If you want my timing indicator, I'm happy to share that with you. Just subscribe to my channel, click the little red button below for subscribe, and then shoot me a quick email, barry@topdogtrading.com, and I'll give you access to that for free. But for today's lesson, let's continue on. So what we're doing is we are confirming the direction of the new trend now down with this indicator, saying that yes, the direction is down, but you know what? It's also going down with some velocity, with some speed, with some strength. And that's the only time we want to trade in the direction of the trend is when it's a strong trend. This indicates it's a strong trend. So I like to primarily use this to confirm the direction that I'm trading in. Now here's another example that I want to share with you, because this is another sign that you need to be aware of. That's when the two lines just kind of hover over each other. Then that means there's no momentum, there's no strength. And so that's a good time to just keep your powder dry, not take any trades at all. You can see what happens here. And you know, it's interesting because the market does pop up here, but it doesn't sustain to the upside, does it? Looks like maybe we're getting a trend started, but there's no strength behind it. And therefore, guess what? It doesn't continue, and it actually comes down. So this is a second signal to look for when the lines are on top of each other. Best to just stay out of the market. And one last piece of advice on how this thing works. When you get trends that move up and then they just go sideways for a while. You see how long it's going sideways? Well, when the market goes sideways for a while, the trend is still up, isn't it? It's up, it's up, it's up. The 50 MA is still up. That's the green line. We do put in a 5-wave trend, the average trend. But in between each one of our waves, or wave highs, 1, 3, and 5, what happens? You get a sideways movement for quite a while. Well, that means that the acceleration, the velocity, the strength has come out of the market. So the indicator will show you that. And so the green line will not stay above the red line during those times. Don't expect it to. Same thing happens here. We just go sideways for a bit until we pop up there. So in these situations, what you do is you just have to wait for the green line to come back above the red line. Sometimes it'll come in a little early, like this one. Sometimes it comes in a little bit later, like this one. And you can obviously adjust the settings. If you make them faster than the ones I have, you'll get quicker crosses, but you'll also get some false crosses, like it might cross here. So that's just the nature of the beast. But anyway, the indicator is not doing anything wrong. Indicators are never wrong, by the way. They're just simply mathematical formulas. So they are doing the right thing. You put some values in one side, pops a different value out the other side. It's always correct based on the math of the indicator. But understanding how it works and why this happens is very important, so that you'll say, oh, well, this thing isn't measuring the momentum of the trend. No, it actually is. Momentum has come out of the trend during this time, and it's indicating that accurately. So during these long, complex retraces, don't expect the green line to stay above the red line, or whatever colors you put to it. It's not supposed to. It's actually telling you something that's useful. It's telling you something that's actually quite useful. So there you go. I like to show all these different examples so that you don't think, oh my gosh, this is the Holy Grail. There is no Holy Grail. The only Holy Grail that there is not one indicator or one price pattern or any one anything. The Holy Grail to trading is really between your ears. That's the Holy Grail. Getting your head straight, getting your head together, getting your attitude right, developing patience, and of course, having a successful trading methodology, which has a number of variables to it, not only indicators, but especially risk management, money management, that has a positive expectancy over a large sample of data. That's what trading is really about, putting those two things together. So if you like this video, please understand it's not really free. I mean, sure, you can watch it for free, but if you got value from it, you actually have a moral obligation to pay it forward. So go ahead and click the share button below and share it on social media. It actually feels good to click that button. I'm serious, it really does. Click it, you'll find out. It's going to feel good. In addition, if you're watching this on YouTube, please click the thumbs up icon below and leave a comment. That really encourages me to do more free tutorials for you. I'm also giving away one of my favorite trade strategies called the rubber band trade. It has a very high win-loss ratio. It's very simple. You can learn in about 26 short minutes. Happy to give you that video explaining the trade strategy absolutely free by just clicking on the image in the top left corner, or if you're on a mobile device, click on the little eye with a circle around it in the top right corner of this video. And if you're not watching on YouTube, then there's probably a link below or an opt-in form on the side. Once you do that, I'll personally email the video to you with the rubber band trade strategy.